Okay, December, a couple days away.
Okay.
Then it's the end of the year. That's
Oh
what's
my
happening.
gosh, and the next thing you know, it's 2019.
Don't freak out, but it is time to think about
Yes.
some financial matters.
It's the best time to do it, right? You're
Yes.
thinking about the year in review, you're looking at your giving, and so we have some year-end tax planning and charitable giving advice from our money expert, Bruce Helmer.
Good morning,
Good morning.
Bruce. Okay, this makes a lot of sense. Giving Tuesday happening right now.
Yep, my wife and I had the conversation last night about, all right, where are we going to donate to? How much are we going to give?
Yeah, you did the story earlier, so it's very, very timely. So this tis the season to give, and the key that I want to, or the point I want to make, is to do it as efficiently as you can. A couple of key tips: if you have highly appreciated assets and you're thinking, I'm going to sell some shares of stock or a mutual fund to make my gift, you can actually give that security directly to the charity and not have to pay the capital gains tax.
That's pretty cool. You can give your investment away.
Yeah, just give it to the charity and then they can sell it and they don't have to pay the taxes.
They don't pay the tax.
They don't pay the taxes. You don't pay the taxes.
And then you can still write that off on your taxes
Yeah,
for next
absolutely.
year?
Well, for this year, yeah. For
this
2000,
year.
yeah, for 2016. Another thing, people, viewers right now that are over the age of 70 and a half, and they know they have to take what's called required minimum distributions from their IRA, they can give that RMD, required minimum distribution, directly to a charity and not pay taxes on their IRA withdrawal, which is really slick.
Pretty cool. Wow.
Yeah, that's really slick. That's a new law that's now permanently in effect. It had been kind of year to year there for a while. And then another one that I always think of is, if you did incur some taxes this year that you didn't expect, and you're trying to accelerate your charitable giving, you can actually invest in something called a donor advised fund. It stays in the investment. It doesn't have to go to the charity this year. You can decide in the future what charity or charities you want it to go to, but you can make that contribution yet and get the full deduction for 2016.
I'm very intrigued by this donor fund. You've talked about that before.
Yeah, and a lot of people aren't aware of it. And you can Google it and read about it, but donor advised fund, real cool concept.
Very cool.
We talked a little bit about tax planning. Is that something that people should be doing right now?
Yeah, because there's some things that you can do before the end of this year, and there's some things that you have more time on. So contributions to IRAs, HSAs, health savings accounts, you have until you file your tax return, or April 15th of next year. But if you want to get more into your company plan, you've got to do that by December 31st. So you might want to talk to your HR about bigger withholdings if you want to try to max out or get more into that plan to get that deduction for 2016.
Are there strategies people should be putting into place before President-elect Donald Trump is sworn in?
That's a great question. I think what's likely to happen is high-income people, the people in the top tax brackets, may very well see taxes go down in the future because Republicans have a majority in the Senate, majority in Congress. Speaker Ryan and President-elect Trump have a similar plan, and I think they want to lower tax rates on those high-income people. And if that's the case, those people might want to sit tight for things like Roth conversions and whatnot and do it in a future lower tax bracket. Yeah.
All right, Bruce, thank you.
Thank you.
Yes. You can see Bruce here on Mid-Morning every Tuesday and get more financial advice on his show, Your Money, on CCO Radio. Just tune in Sunday mornings from 8:30 to 9:30.